Hello, my Pixel peeps. Welcome back. Nicole Payne, CMA, here as always to drop some accounting truth bombs. And today is part 2 of our mini series on budgeting. And I am so excited because, as I've said already, I love talking about budgets. And today's topic is the sales budget. The sales budget is the foundation for the rest of your budget, and it is the foundation for your entire business. So it's hugely important that we budget our sales so that we can make sure that the rest of the budget flows smoothly. So let's talk about the nitty gritty of your sales budget. Now, when you create a sales budget, or when I create a sales budget, I create a matrix because unless you only produce one thing and it's all produced the same exact way with the same sales price, you're going to have a pretty complex sales budget. If you only have the one thing with the one sales price, you may not need a real true sales budget the way the rest of us do, but more than likely you have multiple products that you sell, regardless of whether you're a retailer or a manufacturer or a service-based business. Like, for example, Pixel has bookkeeping services, but within our bookkeeping services, we have multiple service levels. We have tax preparation services, and within our tax preparation services, we have multiple levels, whether you're a business or an individual or a partnership, or if you have all of these other schedules and fun things that are going on. We have tax resolution services. We have consulting services. So our sales matrix has like 14 different line items. Yours might have 3 or 4. Yours might have 10 or 12 or 100. Who knows? Well, obviously, you should know. Um, but I digress. Anyway, so you'll create your sales matrix. You're going to list out. Ideally, I do this in Excel, in a spreadsheet of some sort. If you don't have Excel, if you use Google Sheets or whatever document that you use to keep track of your numbers. I use Excel because it's easy. I like the formulas, functionality, and it helps me make sure it's all laid out and neat and orderly. Anyway, so you'll list out down the left-hand side, all of your different products. Then you'll list out the sales price in the next column. You'll list out the sales price for each of those products. And then you'll have columns for January through December. Now, the reason we create these columns for January through December is because we're not just going to tell us how many we're going to sell in the year. No, we want specific timing of each product that we're going to sell and how many units we're going to sell in each specific month so that we know what our sales numbers are for that month. Because, some things might be seasonal. For instance, as part of our bookkeeping, we have bookkeeping clients who are quarterly. So they pay us once per quarter. We don't get that revenue every single month. We need to plan for the fact that that revenue is coming in spaced out increments. So once you have all of those columns and you've got your products all listed out, then you'll decide how many products or units of each product you're going to sell in each particular month. Sounds easy, right? And it probably is for most of you. But you may also need to go back and look at your historical data as to what your sales were in previous years. Because, like I said, some things are seasonal. If you sell pool noodles, you're probably not going to sell a whole ton of pool noodles in December unless you're like in Hawaii. But here in the continental United States, most places don't sell a lot of pool noodles in December, but you're going to sell a ton of pool noodles in June and July at the beginning of the summer. Anyway, so think about the seasonality of your products. Think about when your products tend to sell the most, and then put that into your matrix. Then at the bottom, you'll have a line that calculates your total dollars sales for each month. And that is your sales price times the number of units sold for each of your products. You sum it all up, that's your total dollars of sales. And on the far right column, you're going to have the total number of units that you're selling of each product line for the whole year. So you'll sum up January through December, and that's your total sales for the year. Now, these things are all very important because, again, your sales are the foundation for everything else in your business. And knowing the timing of your sales is critical because your production or your purchasing needs to be able to keep up with your sales. If your production or your purchasing isn't going to be able to keep up with your sales, you need to be able to plan for either increasing your production capacity or moving up your purchasing dates or whatever needs to happen in order to make sure that you are still able to hit those sales goals every single month. But we'll talk more about that on the next video when we talk about your cost of goods sold budget and your purchasing and production budgets. So hang in there, take care. Hopefully this information was useful. If you have questions, comments, concerns, either send me an email. My contact information is at the end of the video, or you can drop your comments, questions, concerns in the comments section here, and I will reach back out and answer as many as I can. And until next time, take care, everybody.